Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Monday edition. It's Monday, Bloody Monday. U2 was singing to be a completely different song. Anyway, we're going to talk about... Oh, man, I didn't realize how disheveled my hair was today. It's what we get for working out. Yeah, looking good. Anyway, the end-of-day slide, it really wasn't the end-of-day slide that did it. It was pretty much the second half of the entire session was looking pretty weak, particularly for cryptocurrencies, which we'll talk about here in a second. So I had AI draw me a little picture of a red slide, and it says the end-of-day slide on your screen. So let's talk about what might be some of those driving forces there. Of course, we've had a market that's been pretty overheated for quite some time, and as Oliver is in here, I'm sure, you know, we're getting to that point where correction would just be so nice to have. We need one, especially after you have a chart that looks like this. Here's your S&P 500. You know, this is such a gorgeous trend, higher highs, higher lows. Now, today we talked about this, or actually over the weekend, we talked about 6,490 and a half on the S&P kind of being this critical level, and it hit it today but sold off. And it really wasn't a bad day for the S&P. It was only down 0.37, but more interestingly for me anyway was what happened the second half of the session. So there you go. We rallied for the first part. We actually got a slight gap down from Friday's session, and basically, one of the cleanest looking downtrends you'll see in quite some time. This almost feels like it was programmed, like it was automated trading, because it was just so consistent. Like you could almost draw a perfect channel down below that, except for that candle about 20 minutes before the close where it just went really aggressive down and really hasn't recouped much. So even though we're down 0.37, it's an interesting sign, just the way that day finished, right? It was just obviously an overall red candle, not the widest range, but right at those all-time highs. Okay. So for me, looking at this picture of the S&P 500, I'm going to put a line right across the low points, which go back to August 20th, 21st, and 22nd. So that 3-day window of time, just the last 3 days of last week. That's 6,362 and 3/4. That would seem like a pretty logical point for this to pull back to. Now, obviously, if this is going to continue to stay in an uptrend, it shouldn't come down that far. But if it does, if we start to see that break down below 63.72 and 3/4, yeah, I'm probably ready for a little bit more of a sell-off here, because that means we're making a new pivot low. Now, someone asked me earlier if I could put on moving averages today, and I don't know why you guys want moving averages on there so bad, but let's throw this on. Let's put a 20-period moving average on here just for visuals, and yeah, it doesn't really help that much. Interesting thing here for moving averages, for those of you who decide to use them, like this is a 20-period moving average, but it doesn't really fit the picture. I worked with a trader years ago that he did something really interesting. He would just continually adjust this until it started to fit the picture more clearly. So I'm here on TradingView, I'm just clicking and going through, and it looks like that moving average right about here is about perfect. I know, who's going to use a 37-period moving average? Well, that at least catches these last two low points, the low point from August 1st and 2nd, and then you have the 20th, 21st, and 22nd lows as well. So, yeah, let's keep that 37 on there, see what happens, right? Exactly, Stephen, like what, a 37? And I'll tell you why. For me, I want to look at the normal ones, the 20, the 50, the 40, the 200. Those are the ones that like everybody looks at because they're typically the defaults built into the system. But with every price chart, every one of them has their own unique characteristics. And maybe the person who's got the lion's share of the power there, meaning the guy who's actually driving that market, institutional investor, may be using a different moving average and using that as their support tool. So looking at this picture, that 37 fits it pretty tight, at least over the last couple of dips that we've had in this one. So we'll leave this one on here. Almost 40, right, Andy? It's almost 40. So close. It's almost 40. Yep, it is. But we'll leave it. Let's see what happens if I change this to a 40. It's probably going to be pretty darn close, but let's go straight to a 40. Okay, but see, notice how it's off on this low from August 1st and 4th, right? I'm going to button it back up to the 37 because I want it to hit those exactly. I like that. Bam, and there we are. So runs up right onto those, sits on it. So I'll watch this over the next week and see if we get that pullback down to that blue uptrending moving average line, which as you can see, by the time we get down there, will probably be a little bit higher here, just given by one of the current trends in the market. But all in all, not a horrible day, even though there was an end of day slide. Exactly, Steven says 37, not 40, like 7-minute abs. You mean 6-minute abs. We've already undercut 7-minute abs. And why not? Why not modify? Because if I use just a normal moving average, it might not be respecting that one. But why not? Let's adjust our indicator to where price is respecting that indicator. And even though 37, you kind of scratching your head going, that seems a little bit odd. Why 37? Well, why not? Right? And it doesn't mean that we have to make our trade off of this, but it can certainly help us. And if it respects this trend, then even better. All in all, S&P still looks great. It's still making higher highs and higher lows. It's just we had a little bit of a sell-off here today. And I guess the big question is, why would that be? What happened? Well, let's go look at the other indexes as well. As the S&P was down 0.37, NASDAQ was only down 0.28. Fine there. Not respecting the 37 period moving average. I'll just turn that one off for now. We'll just get rid of that one. We don't need that. We'll save that for the S&P for the rest of the week. But technically, not a lot going on here. Again, a very small trading range day, which, as a lot of the media pointed out, they made it seem like it was this chaotic, market crash kind of day, like you should be afraid what's going on. It wasn't that big a deal. We'll talk about crypto in a minute, which is a big deal today with some pretty significant sell-offs there. But from an equity perspective, not bad. I'll bring the Dow up here. The Dow was down a little bit more, 0.71%, which broke through all-time highs on Friday, and all of a sudden we start to give that one back today. So you had your breakout and then just retrace 0.71% to 45,390 for your Dow. And last one I had on here, let's go up to the Russell 2000, which was one of our darlings last week. Same thing, giving back just a little bit of those gains for the Russell 2000. Was down 1% on the day. So honestly, not much. That's a drop in the bucket, be down only 1%. The real pain, the real end-of-day slide comes from crypto and digital assets. So I see multiple questions coming in here. Would you buy ETH in this daily demand zone? What do we got? Crypto does not like all-time highs or new highs. You would think that once it ripped through something, it would just keep on going. Let me go to the spot market here for crypto. And we'll start off with Bitcoin and work our way around from there. I've been worried that we're going to break this level, this upper yellow box, which is low point was 111,919. Not only did we break it, but we got a significant close below that one today. We're currently trading at 109,604, and it feels like it's going to continue to slide here. Ultimately, where does this push it? Well, you did have the sideways consolidation back here in July 4th, 5th, 6th, 7th, and then it screamed up. So that's the next logical point for me anyway. I mean, we all have different places where we're looking at, but that is the next logical spot for me between 107,520 and 108,947. So I think we'll probably hit that tonight. Just the way this has been going, looks like it's getting weaker and weaker. What you don't want to have happen is all of a sudden it breaks through that one, and then we got to go for this next stair step. And this isn't even that really great of a zone. Let me tailor this one down to where I think it would be a little bit better. Then you got a much lower level, getting down about 102. And I think I saw somebody in here talking about as long as we stay above 100,000. Let me see if I read that one correctly. I don't know where it was. Nope, I don't see it. Sorry, the perils of going back through chat trying to find a specific number. Don't always work for me. George says, apparently whales did some selling. Well, it's not just whales. Again, you have these liquidation levels where you get leveraged longs. So if you're using a DeFi marketplace, you could get 20, 50, 100, 500, 1,000 to 1 leverage on your positions, whether it's long or short. Now, I always like it when I see leverage shorts get taken out because that means big pops to the upside. And I didn't look at it today, but today definitely feels like this was a let's liquidate some of the leverage longs. And if you look at Bitcoin's price chart, where do you think those leverage longs are holding on to? It's that level that just broke today. So most likely what happened is we had just a push. They'll call them flash loans. So a flash loan is where you can borrow money for one block of time. It's literally intra-block, so it doesn't, it's kind of a complex topic. But they can do these flash loans, which in Bitcoin will last, less than 10 minutes. And you can go into, thousands to 1 leverage positions here. And they probably just opened a massive short position, triggered all of that leverage longs, and that caused a cascade of selling prices here. So that's probably what triggered all this today. But Bitcoin's only down 3.25%. You look at some of these other ones. ETH was down 8% today, and it was so nice over the weekend, right? We tipped into all-time highs on Sunday, and then just gave back a lot of that today. Down 8.74% just in the last trading session. So pretty aggressive sell-off there for most crypto. The question is, does it Stabilize, is this that buy point? I think Margaret asked that one here. Would I look to buy, Ethereum here? Not really. We could make the argument that there's your zone. I don't really like this zone at all, and you've just tiptoed into it. And you could argue that certainly could be a buy point. I feel like there's going to be more sell-off here. I feel like there's going to be more pressure pushing this thing to the downside, whether that's from a political perspective or just long overdue profit taking on some of these positions. I do think you'll get a deeper sell-off here in some of the crypto. Now, the good news is it will create some buying opportunities for those of you who have some dry powder left. So you could potentially buy some. But yeah, ETH, I don't know if I would buy ETH right now. I mean, it's only 10% off its all-time high. Still a good discount. And I think long-term, as I mentioned many times, I think that Ethereum is going to go significantly higher. I do think 6,000 by the end of the year is completely within reason for Ethereum based off of the Ethereum treasuries that are now starting to pop up all over the place. So those are your two big main ones was Bitcoin and Ethereum. I can sort here just so you can see some of the bigger losers on the day. LivePeer, of course, I own LivePeer. Not doing much over the past year. Down 12%. You have Optimism, which is a layer 2 for Ethereum. We talked about some of those layer 2s like Arbitrum and Optimism. Those are the big guys that are going to benefit from Ethereum's growing popularity. They were both down almost 12% today, so not very good. All right, let's see. Big Ed says this Bitcoin action is similar to what happened in late July. Did it? I mean, I haven't looked at those kind of comparisons, but let me check and see what happened in late July. Let's go zoom out here just a little bit. You mean with this sell-off here, where we broke down below some key levels? I mean, if you're on late July, that'd be this one right here. Yeah, I'm not too concerned. It certainly looks bad, but on the grand scheme of things, we're still in an uptrend. I do start to get a little concerned if we got below 108 and kind of close below 108. I'm not too concerned. I think overall, just the sheer demand growth for Bitcoin, as well as the treasuries, as well as companies adding it to their stockpiles, I think just the long-term prognosis for me is still to the upside. I think what you're getting here is leveraged positions manipulating the market. Okay, so when I say leverage, again, these guys can go to DeFi marketplaces. They can get these flash loans, which again give them thousands to one leverage. And let's just use this as a visual example here, right? If I'm looking at this picture here of Bitcoin, so here we got Bitcoin. You can see you got 3 yellow boxes on your screen. The first one is up there between 113,000 and 112, right? If I'm looking at that picture, just based off basic technical analysis, I know that if people are using stop losses, their stop loss are right around 111,500, right? It's down around there somewhere. Now, I also know that I probably don't have enough money to trigger those stops and force it to go lower. So what I can do is I can go out to a leveraged short position. I can go use a DeFi marketplace and I can get that. Or I can use a flash loan and just do a market sell for a 1,000 to 1 leverage position. Now what that does is that's instantly going to blow through this demand zone down below 112, push it to 111, 200 or something, and then all of a sudden it cascades and it triggers all of that unwinding of leverage positions. So I think one way we'll find out if this is a leverage position is how it responds. How does it bounce back? Unfortunately, as Steven says, I think there's some shenanigans going on with Bitcoin. Yes, that is absolutely true. But remember, everything is on a blockchain with Bitcoin. So we know exactly how much Bitcoin there is long, how much Bitcoin there is short, where it's all at. And this allows people to target those levels. Let me see if I can bring this up for you. DeFi Llama. So DeFi Llama is a DeFi dashboard. I don't know if they have the Bitcoin stuff on here. Typically, it's just with Ethereum. Let's go to metrics. Oh boy, they changed everything. Wow. Oh man, I hate when I know a site well and they've changed every single piece of it. Dashboard builder. I'm looking for liquidations, but it's not here anymore. That's nice. Okay, well, sorry guys. I thought I could take you to a liquidations page here and we could see kind of what was going on. Here is Bitcoin, and it's just showing me price chart, but doesn't give me any of the leveraged stuff. That sucks. Boo. Let's see real quick. Let's see if I can find it. I know it's in here. Total value locked, oracles, yields, stake by protocol. I'm looking for liquidations. Stablecoins token. Let me just do a control F and look for liquidation. Nope. Nope. Earning by protocol, revenue protocol. Oh, sorry. Bummer, guys. I was really hoping I could show you this because what'll illustrate is where those pockets of leverage longs and leverage shorts are on these different cryptos. And that is what people are targeting. And they can easily pinpoint, oh, if I can drop Bitcoin down below, let's say 109, it triggers, $8 million or $50 billion worth of sell-off, and they'll take that all the time. So typically what happens is you get that big drop down, and then that person that leveraged short and pushed it down, he has to, close out his leverage short, which means buying it back, and next thing you know, it comes popping back up. So it would really be interesting to see what happens in the next 24 hours with this candle. If this was, in fact, just sheer manipulation and someone using, flash loans or DeFi marketplaces, you'll probably see this rip back up, and we'll be back up against 113, 114 in no time. If it is, in fact, people unwinding because of maybe negative news or different opinions, just negative stuff on Bitcoin, then yeah, this would be a real candle here and would continue to sell off and probably make it even lower. So we'll see. Liquid staking shouldn't have too much of an impact on it, Margaret. No, shouldn't have too much of an impact on that price movement. All right, let me. I have no negative Bitcoiners. You don't need any. All you need is one person to trigger those sell orders. So I'm going to talk briefly about market correlations because Les, who's here, thank you, Les, for that. Appreciate your questions. And by the way, Les, thank you for your comments. You sent in some very nice comments. I appreciate that, and it does help. It does help along the way. Love me some Beatles, too. Market correlation. So here's first question from Les is, what are your thoughts on ETH for those of us who want to be in Ethereum world but don't want to worry about ledgers, passkeys, phrases, etc.? I totally agree. I'm absolutely on board with you. Look, I like the whole crypto world. I think it's interesting, but it's another language, and some people just don't want to learn it. So ETHA. I'm a fan of ETH. So this is, again, iShares. It's one of the biggest funds out there. I'm not worried so much about its liquidity or issues with it. And if I recall, it has a very low management fee. Let me see if I can expense ratio 0.25%. So there you go. So you're trading at 0.25%, pretty small transaction fee, or at least expense ratio for that ETF. So yes, I like it. I think that's probably a good way to go. Man, Steven, you want to retain that number one spot today in the chat, huh? You're kicking booty over there. Margaret says it's not like BITO. No, absolutely not. Notice at the bottom of the screen here on ETH, you don't see anything that says D for dividends. If I type in BITO, notice every month it pays a dividend, which some people like that, right? But my issue is when you have something that pays a dividend like BITO, let's say you add on Bitcoin, it doesn't look anything like the price, right? The solid line you see at the top of your screen is Bitcoin, and the one at the bottom is BITO. And over time, I have not done the calculations, I'll be honest, but I do believe that the cost to own BITO it's worse than if you were just to own Bitcoin or own IBIT. Let me put IBIT on here instead of BITO. Let's go in there and change that. We're going to go IBIT. So this is a spot product, is IBIT, again, run by BlackRock. So that's your chart at the top. And if we were to go for the beginning of the year, let's say 2025, Bitcoin's up roughly 15.66%, and BITO is down roughly 14.6%. So that's a 30% delta change on those. Not good, right? Not good. But again, in that window of time, we've also received 1, 2, 3, 4, 5, 6, 7 dividend payments, and those dividend payments are $1.20, 77 cents. So it's definitely taking some away. But I venture to bet that even if you took in the premium dividends, right, the dividends you collected, it would underperform IBIT if you just bought IBIT. All right, let's see. Hold on. So Steven went crazy over here. All this chat, Steven. What's going on? Time to bail on Intel now then. Intel was down today, wasn't it? I thought it was down today. Yeah, you were down just a little bit today, 1.01%. Yeah, that buy the rumor, sell the news, especially with, what's going on politically and, 10% ownership for the government. I don't know, 10 or 15%. I don't know. I don't think the government makes good choices when they buy things. This is I think trying to save their own skin. Not a good historical track record there. Let's see. Steve says, Oracell puts against it. Does it have decent premium? No, not really. BITO, I don't know. I don't trade BITO. IBIT does. IBIT's premium is not bad. Unfortunately, markets are closed, so we're not going to get a good indication of what that premium might look here. But let's just go IBIT. Right, we go here to the chain, and let's say you wanted to sell it for a month out, right? So you're going September 19th, a little less than a month out. And right now you're at $62 strike on this bad boy. Yeah, it's at 60. It closed at 62.88. So let's say you sold it, 88 cents lower than current market. You're going to get almost 4%. 4% rate of return if you held it out till September 19th at a $62 strike. Not bad. Decent premium. Let's say you wanted to get 1% for the next month. What would that give you? You could go out and I'm an idiot. I'm sorry, I was on calls. That was my bad. 62 would give you $1.86. So it give about 3% if you sold the $62 puts. But where does 1% get us? 1% is going to give you roughly the $56 strike on IBIT. So let's put a $56 line here so we can just see that one. And let's go our coordinates, and that was 56. So, for those of you looking for a 1% per month strategy, this is not that bad. Right now, and this is based off what happened today, we're at 62.88, and it's actually down to 62.35 in the after-hour session. But you could sell puts that are currently roughly 11% lower than the current market. And if Bitcoin falls 11% within the next month, well, you're going to be on the hook to buy it at 56 bucks. If not, you get to keep all that premium, and that's 1%. Not bad. I actually currently have the $62 strikes, which I sold last week, and I collected about 1%, so not bad. Mine expired this Friday, though. Yeah, I agree with you. It's a decent area because you're actually down below those demand levels, right? Not too bad. So, Merlin, I guess we're waiting for NVIDIA to save the war. Yep, totally. That's really I think everyone right now is just waiting for NVIDIA. I actually expect tomorrow to be a relatively light day, just in anticipation. And tomorrow and Wednesday, right? If I'm not mistaken, I have not looked at the calendar. I'm pretty sure that earnings announcement is going to happen on Wednesday after market, but let me just verify for all of y'all and show you right here. Boom, boom. There's your earnings calendar. Here's Wednesday, and NVIDIA should be the top of the list. Yeah, so this is Wednesday after market. Certainly, I think our market's probably going to have a little bit lower volume just to kind of be ready. Yeah, Wednesday. But yeah, NVIDIA is going to be the piece that makes or breaks the market. It's either going to cause a huge move up or a huge move down. Massive volatility. Right? Apparently my chat was disconnected there. All right. What else we got here? The premium is higher than usual because of the drop in price late. Yep. When you have big drops like this, especially, the futures were down 5%. But remember, the futures market closed on Friday and opened up today, or last night. That's why the number looks so big. But if you look at just the spot price of Bitcoin, when you have big moves like this and people start to panic a little bit, the premiums definitely spike. When you look at IBIT, right, premiums are going to be a little bit higher today based off of the last two trading sessions here. Just a lot of volatility on that one. So absolutely. What do we got here? Would you go with BITO or IBIT in an IRA? I would. Well, it doesn't make it. It depends what kind of IRA we're talking about. If it's a Roth or traditional, because you get the tax exempt stuff for a Roth. In a Roth, I would probably myself want to go. Actually, I'd rather go with a Roth anyway, if you can. But I still would do IBIT. And here's one of the main reasons for that one, Andy. BITO is a futures product, right? IBIT is actual spot Bitcoin. BlackRock owns the second largest holder of Bitcoin out there other than Satoshi and Michael Saylor and Strategy. So IBIT actually owns the Bitcoin. If you look at BITO doesn't own anything. They own bupkis, zero, goose egg. They only own futures products. And as you know how futures products work, let's say I'm making up that they're monthly contracts, right? And let's say you've got the September contract, which is going to expire here soon. You got the September contract. Actually, get the September contract. At the end of that September contract, it's expecting what the price is going to be third week of September. Now, when that contract expires and you now roll that into, let's say, the October contract, you're going to get gaps in price. It's not a seamless transition. Those gaps erode at your profitability. They take away some of those gains. It's either backwardation or contango are the two terms for that. Not really good. That's not really a good thing because it starts to deteriorate the value of those instruments. So yeah, I'm not a fan of any futures product ETF. Even things like Boyle or UNG, right? Those are futures based. That's why I love IBIT. IBIT's a much cheaper cost production. If you look at, here's IBIT. I already showed you it's 0.25. If you look at BITO, and we go to their performance numbers, I think it's analysis, 0.95. So Beto is almost 4 times as expensive as well because they're managing it with the futures products. So yeah, I honestly, under no circumstance would I want Beto. Now, to be fair, if you are someone who is thriving off of dividend and income streams from your dividend payments, then you might want to consider Beto. However, line them up side by side, calculate the rate of return, including your dividends, and I'm going to bet you that your rate of return is less with Beto than it would have been if you just held IBIT and didn't get paid dividends. Let's let those dividends roll, or the dividends take money out of the market, whereas just keep it in there and let that ETF run. I wonder how NVIDIA profit will be affected by government taking 15%. Do they miss because of that? No, Stephen. Totally different. It's not 15% of their profit. That's not what the government's taking. The government is going to take 15% of the Chinese profit, and in return, NVIDIA can now sell to China. So what you have is a market segment that they have not been allowed to access. Well, limited access to it, right? But now you remove the handcuffs, so you can do way more business in China, and you got to give 15% to the government. So I think, personally, I think it's actually going to help their numbers. I don't know how the extent to which that their business is in China. Yeah, exactly. Big Up says 80. That's the 85 is the upside for NVIDIA, right? But it's 85 for a market that's been held back. They have not been allowed full access, and now I'm not sure if it's full access. I don't think they can sell everything over to China, but there you go. Just raise your price by 15% to China. You mean pass on to consumers, Stephen? You mean like a tariff? Oh boy. The Walmart call was pretty interesting for that, where you kind of just learn, like, okay, we're seeing these tariffs. Is it just gaming chips? I thought it was the H20s as well. I thought it was H20s. Okay, let's go. Louis says, but I thought that China did not want their chips for national security reasons. Possibly. I don't know. I'm sure there's businesses over there that want their chips. Absolutely. But I'm not privy to all the details of what is allowed. I know they were not allowing the A200s or H200s, and that they couldn't sell the H200s, but then they could sell an H20 to China, which has reduced functionality, reduced performance numbers. But I don't know. All I know is that it now gives them greater access to China, which is a massive market. And if they get 85% of that, then I think that should probably help them out in the long run. So let's ask that one. The first one was ETH A. We went on a little bit of a tangent there, and we already talked about that Ethereum chart. It's rough. It's rough. Not that sell-off today definitely has people a little bit freaked out. But again, until we get below like 4,000, I'm not worried about Ethereum at all. I think these treasuries are going to do wonders for the price of Ethereum going forward. All right, Les's second question. Is Bitcoin and Ethereum correlated to any equity or product? I'll tell you what, I really feel like it depends on the day, right? It just seems to fluctuate all the time. Now, Bitcoin is one I think more people are focused on as far as correlation. So let's just go here and we'll just bring up, whatever. I'm just gonna bring up the NASDAQ, okay? And then we will add on BTC USD. Let's see if it allows me to do it, because it's technically not spot. It's not 24 hours. Okay. So here you can see the NASDAQ and Bitcoin. The Bitcoin is the solid line, and the candlesticks would be the NASDAQ. And I think that you can feel pretty confident. I mean, yes, there's definitely some outliers as far as performance goes, but they're both pretty solid, right? They seem to be following each other fairly closely, and that's just for like the last year. Here's the chart for the last year. Obviously, the NASDAQ's going to have less volatility, but you can just see the demand pouring into Bitcoin. And just like demand pours into Bitcoin, it pours out of Bitcoin. And we'll probably see this drift a little bit lower, I think. Maybe go below the NASDAQ here as far as that trend line on the NASDAQ. And then it'll bounce back up at some point. It's a slight advantage right now for Bitcoin for the year. At least where I'm lining it up now, it shows about 13.5%, whereas the NASDAQ shows about 12 and change. So slightly better there. But there's times where it feels like it follows lockstep, and other times where I feel like it's just on a completely different planet, like no correlation, like what is going on here? And that's just part of the game. I think let's do the other one here, which everyone says is correlated, and that's gold. So let's go back to the beginning of the year here. You can see the same chart. Gold is the candlestick pattern and Bitcoin is the solid line there. Well, based off that, this year, gold is outperforming Bitcoin by a pretty decent margin. Much better. Of course, when you zoom out, the picture changes dramatically. But yeah, I'm in the camp. I do agree with the statement that Bitcoin is kind of digital gold. But it's not following gold that closely, right? It's just a little bit different than... Michael, what kind of question is that? I'm going to pull off the COVID vaccine? I don't know. Who knows? No idea. We're not going down that route today. Yeah, Steven, that's why I brought that one up, because it does look closer to the NASDAQ. Here's the S&P with Bitcoin, and we'll go out just for the 1 year. I mean, it's following the major indexes. I think that's the interesting part, is it feels like it's really following the broader indexes, just more extreme. It's like, think of it like the S&P, right? If you follow what beta is the volatility of the S&P 500, and that has a value of 1. Well, and looking at this picture, it's almost like Bitcoin is just a beta of 2, right? It's just more volatile than the S&P. Here is it against the NASDAQ, right? It's just pretty darn close. It got a little bit ahead, but then it started to sell off, right? So we are now technically for the year down just slightly down below that, or a little bit. So to answer that question, it's a tough one, Les. I don't know if I would definitively say it always has this kind of correlation. It feels like it's now following the broader indexes more. When I see the NASDAQ down big on the day, Bitcoin's down even bigger. When I see NASDAQ rally on the day, it seems like Bitcoin's up even more. So just more of a more volatile index, really. All right, what else do I have here? There was one other thing. Oh, I guess I'm going to just go to some trades. Not good for me today, but here is the portfolio. You guys know my current positions. I've got MicroStrategy, United Health, CoreWeave, Palantir, and NVIDIA in that portfolio. When I look at the new options, I did add in a UNH 310 call, and my average price is so low on that bad boy anyway. I just wanted to play a little bit more aggressive. Let me take this Bitcoin price chart off of here. You guys can see that I'll put the line on the 410 here. I did expiring Friday. So there's your 310 mark for my calls. We're right there. Right now we're at 304 and change. I sold the UNH 310 calls expiring this Friday for $2.50, and we'll see if those come to fruition. But that is the only one I made today. I still have 2 positions that don't have covered calls against them right now. That's MicroStrategy and CoreWeave, which did not do well today. CRWV. I was really close to buying some puts on these bad boys, at least for MSTR. Yeah, MicroStrategy had a pretty big gap down today, of course, because of Bitcoin sitting at 339. So that's that one. That one's starting to sting a little bit there, but when Bitcoin has its rally, we'll be fine. It'll move more to the upside. Okay, what else did I have? I got to that one. Oh, this is a question from, was this from John? I hope I got the name right. I think I may have, I think I forgot to update the name here. Hold on, this was a comment that was in the video. No, it's Eric. So let me get this name correct here. This is for Eric. I just didn't change the name on my slide here. So my apologies, Eric. I will put it on there to give you some props. Oops. Control Z. All right, this is for Eric R. Eric Reddle. Spelled the right way too. E-R-I-C-K. There you go. So Eric Reddle says, so if it's true that Coinbase and others are manipulating the Bitcoin market with fractional reserve lending, then why are so many of us participating in Bitcoin? It just seems like we're beating our heads against the wall while the market is completely manipulated. I would argue, by that rationale, then why does anybody keep our money in the savings account, right? If you're going off that same premise, that it's manipulated, they just keep printing money, I guess with the savings account, we know we're getting a certain rate of return, right? With Chase, I'm getting 0.01%, or I could get maybe 0.4 somewhere else. That's the national average. So why are we in it? Well, remember, while Coinbase and these other firms, I believe, are doing fractional reserve lending. I have no actual proof of that. I think that they're going to try to keep that under wraps as long as they can. But there is a fundamental flaw there, and that comes in the form of a run on the bank. So a bank typically has what's called a reserve requirement, where they're only allowed, they have to keep a certain percentage of a customer's deposits to protect themselves, right? You don't want to be lending everything out, because if you lend it all out and everybody wants their money back, you're in trouble. You're going to go under. So what Coinbase and these other firms that are doing fractional reserve lending have to pay close attention to is how they lend out, right? What is their reserve percentage? So let's say they've got, I'm making it up, 100,000 Bitcoin. Are they using a 50% reserve so they keep half that Bitcoin and don't ever lend that out? Or is it 10%, right? That's a huge difference, because if I'm keeping half of all the actual Bitcoin I have and like lending out against it for the second half, okay, I'm putting myself at risk, but that means that half my customers would need to take their Bitcoin out at once before I really have a huge problem. If I go 10% reserve requirements and all of a sudden 10% of my customers take out all their Bitcoin, then I am completely screwed, right? Because I don't have anything above 10%. So the only concern here for Coinbase is a run on the bank. And I'm hoping that it gets to the point that we can see what that reserve requirement is. Because while it is manipulated, they still can't do too much, right? They can give the illusion that there might be a little bit more Bitcoin than there actually is. But if we get more demand, that demand will far outpace the production of Bitcoin, and we'll see Bitcoin prices surge because demand will far exceed supply. Just the nature of how prices are going to work. So we're in it not for the short haul either, Eric. I would argue that most of us are in Bitcoin for the long haul. We're looking at something that is a monetary system for the future. And while it's getting adoption now, and I am seeing manipulation happen left and right, like I think we saw today, that's just part of that game. I'm not going to get shaken out by these short-term fluctuations or volatile activity. I mean, obviously, when you have a portfolio like mine, when you have a 5% down weekend for Bitcoin, that costs a lot of money, or 12% for Ethereum. That gets expensive. I don't even look at it. I don't care, because I'm not thinking, tomorrow. I'm thinking way down the road for that. So that's why we get in. That's where we get. Chad says, interesting Bitcoin run on that bank scenario. That's why I was telling you guys that I think Michael Saylor probably has a contractual agreement that says he cannot take his Bitcoin off the exchange because it's not there, right? I mean, let's just assume that Coinbase has, let's say, 300,000 Bitcoin. 300,000 Bitcoin is all they actually physically own, right? And everything else is all leveraged out. If Michael Saylor came out and said, I want to take my 628,000 Bitcoin off the exchange immediately, all at once, Coinbase would implode. It would be a systemic failure. So most likely he can pull out a certain amount of Bitcoin, but my guess is it's like a very small amount and he can only do a certain amount per day, just so Coinbase can get a head start, and he'll probably have to notify Coinbase of his intentions. And they'll probably give him some preferential treatment for that as well, right? He gets better pricing as long as he doesn't take it off that exchange. Because in reality, if I'm Michael Saylor, the way that you boost Bitcoin up to $1 million, literally probably by the end of this month, would be to take all 629 or 28,000 Bitcoin off the exchanges and put it in cold storage. If he took that kind of liquidity out of the marketplace, everyone would be scrambling to buy Bitcoin, including Coinbase and Fidelity, who have fractional reserve lent, and the price would go straight to the roof. Straight to the roof. But I'm pretty sure that there's safeguards in place on behalf of these exchanges and agreements between Michael Saylor and others so that that doesn't happen. Bitcoin going up from your optimism. Is it going up now? I'll just keep talking positive about it, and we'll just see how high it goes. I'm not going to stop talking for Bitcoin for the next 6 hours. A little bit of a bounce. We're at 110.1. Not a big deal. Hope he is listening. Hey, you know what? I hope that Michael Saylor's listening. Like, if I'm Michael Saylor, and let's say Coinbase says the most you can take off is 10,000 Bitcoin per day, I'm setting up auto withdrawal to do 10,000 per day, every day, until all of it's off the exchange. And I don't know why he doesn't do that. I agree with you, Stephen. He's literally working against himself. I agree with you. For someone who claims to know Bitcoin so intimately and so he's the orange pill king, it doesn't make sense. I really think that he should be taking his crypto off the exchange, take his Bitcoin off of Fidelity or wherever and put it on cold storage, take that risk himself, and he would drive the price way higher. I mean, you look at MicroStrategy's price. If they took all their Bitcoin off of the exchanges, this thing would be way up here. I mean, it would just start, every day it would just start rocking higher and higher and higher because the supply on the exchanges is going to get less and less and less and less. The beauty of Michael Saylor and misinformation. But again, we really just don't know all the details behind his accounts, how they're structured, what the rules are. Too bad I don't have anyone like that to follow. Marcus, similar to those movies, Sabrina. Oh boy. and these markets are unregulated. For now, I really hope that the SEC, when we get the Clarity Act, I'm hoping that the Clarity Act will cover exchange obligations, right? What actually has to happen in exchange. And I think that these exchanges should be under the same rules as E-Trade, Charles Schwab, Fidelity, Goldman Sachs. They're money transmitters. These are securities. They should have audits on this all the time, and I don't know if they do. I don't know the extent to which these guys are audited. Their books are checked to make sure everything is above board, reserve requirements and things like that. You know, when you look at somebody like a Charles Schwab, right? When you hit that sell short button on Microsoft at Charles Schwab, you're literally borrowing from one of their customers. They're lending you a customer's shares, they charge you a transaction fee, and they get paid. But if they have 100,000 Microsoft shares, they're not going to let you borrow all 100,000. They can't take that kind of risk. They're going to let be a small percentage. So these firms today have rules in place, safety mechanisms, if you will, to prevent themselves from being, you know, a run on the bank type scenario. They got to protect themselves from a risk management perspective at all times. I don't know if that is for Coinbase. I don't know if that's for, you know, Kraken or Binance. I would hope so, but I'm starting to lean down the path that they're not. All right, let's go and look at your economic calendars for mañana. Now today was an interesting one. I mean, we had one piece of good news, and that was your new home sales. Now, I say good news because expectations were we're going to go from 656,000 jobs, new home sales, down to 635, so declining, 19,000. We actually came out at 652, which is good because that kind of gives us a flat line here over the last 3 months for new home sales. Great, right? We don't want to see it like crashing. New home sales was obviously great for things like Toll Brothers, Lennar, KB Homes, etc. So you want to see those numbers kind of stabilize and hopefully start to move to the upside. So it was way higher than expectations, which is a very good thing. Now tomorrow, you do have durable goods orders. That's a big one for the United States. That's going to happen early in the morning. That's going to be 1 hour before the markets open. Actually, let me make sure about that one. Yeah, 1 hour before the markets open. Durable goods orders come out, and then those are expected to be getting better. But you see here the durable goods orders was really negative in the last reading, negative 9.3. They're expecting it to come out at negative 3.8. My guess is it'll probably be a little bit better than that, so that could be a positive catalyst for tomorrow. But you also have the S&P Case-Shiller Composite 20 Home Price Index. Say that 3 times fast. Now, that one's important because that's house price appreciation. And it's been dropping pretty quickly, right? Since early 2024, we're watching that number get lower and lower and lower. Not good to see home prices decline. Not decline, but they're not appreciating at such a significant rate as they did before, right? Anybody here who owns a home, you want to see this up in the 10, 15, 20% mark would be fantastic. But unfortunately, it doesn't happen like that all the time. So we'll keep our eye on that one for tomorrow. And that's pretty much it. You have a consumer confidence number, but no one really cares about consumer confidence. Now let me switch back over to the earnings calendar, which I thought I had up here. I do. Here's Tuesday's earnings calendar. You've got really a lot of small companies. Okta will be out there tomorrow, Bank of Montreal, Bank of Nova Scotia, but honestly, most of you probably don't hold any Bank of Nova Scotia or Bank of Montreal. So nobody really there on the calendar for tomorrow, which will make it kind of a boring day from the earnings perspective. And I think that's going to do it. I think I'll do it for me. I covered what I wanted to cover. Talked about the little red slide at the end. Not the best sign, particularly for those of us in the crypto space. Let's see if we get a nice little rebound here on Bitcoin in the next by tomorrow. Hopefully we'll get that bounce. Weekend wrap up. What about it? Did I show you the weekend? I show you this one, not the weekend wrap up. This is the end of day slide. I don't really have much of a recap for the weekend. Honestly, over the weekends, I really try not to pay attention to any news. I try to just disconnect from this stuff and really just be, out of it altogether. I don't like watching the news over the weekend. I try to enjoy my life and have some fun. I started more workout stuff, so I'm doing this. I don't know if you guys ever done F45. I'm doing F45 early in the morning. I'm a nighttime person, but I'm kind of trying to reinvent myself. So I'm now getting up early, doing workout early in the morning, pickleball at night. So lots of exercise. We'll see. I hope I don't go. I got a certain weight level. I got to stop right there, but now we'll hopefully start getting a little more fit in the process. My weekend, what did I do? Man, what did I do this weekend? I played some pickleball. I did some shopping. I had a little game night. I had a fun little game night party at my house. By the way, here's something kind of fun. Let me see. It's called Activate. So keep your eye. Unfortunately, I saw an ad on Facebook for this, right? It's called Activate. What? Hold on. What's going on here? Get out of here. It's a gaming system. Okay, why? Scroll to choose. Don't turn on. Okay. So it's a gaming place. And basically it's like Squid Games. So you go to this place called Activate. I don't know if anybody's done it. Let me know. F45 is a workout thing. It's a 45-minute workout, but they're pretty intense. Pretty expensive, too. I'm doing a trial for a week and see how it goes, Steven. I just want to really get better, in much better shape. But you have these games where it's like the whole floor lights up and you have to jump on little squares. You have... it's pretty cool. I'll show you this. Here you go. All kinds of great interactive game. I'll stop before it gets too tiring. You've got like all these moving lasers and things like that, and I'll tell you, I bought it as a gift for a friend of mine. He, I might do CrossFit too. We'll see what happens after this. Yeah. F45 is great. I'll tell you, one of the reasons I want to do it, though, is to meet new people. So Irish says calisthenics on YouTube. I'm 100% behind calisthenics. I need to meet more people. As you guys know, I've recently gone through a separation with the most important person in my life, and I need to move on and need to meet some new people. So I will, maybe I find her at CrossFit, F45. We'll see. But just want to be more new people. Anyway, if you have an Activate in your town, they had a grand opening here in Tustin, which is by my house, and it was $5. And I managed to find these tickets for $5 on Facebook. The place is pretty cool. I mean, tons of games to play. I thought it would be like an arcade, right, where you're not really moving much. Holy cow. I haven't sweat that much in years. In 1 hour, right, it was a 1 hour game. You guys type in, how many active calories do you think I burned, right? For those who work out a lot, you kind of have a ballpark idea of, how many calories you burn in a certain window of time. How many calories do you think I burned in 1 hour on this Activate game place? It was really cool. See if I can find the exact workout here. I don't know, it doesn't hold yesterday. Any guesses? Put the bot on, stay active? Yeah. I don't drink much, Irish. I don't drink much. Very little. It was 590 calories. I burned 590 calories in an hour. Some of you put in like 2,000. You guys, there's no way you could burn 2,000 calories in an hour. That's not possible, guys. I was dripping playing these games. It was so much fun. I would highly recommend it. Great activity, a lot of interactivity. Oh, yeah. I'm scared of some of the women in CrossFit. Well... friends are friends, right? Makes new friends. And Irish, I'm absolutely staying active. I work out probably 6 or 7 days a week. So my arms are going to we'll get a little bit better, but hopefully you guys will see the change over the years. Don't worry, ladies. I'll keep the shirt on. But yeah, I intend to work out a lot more and start doing a little bit more weights, and hopefully we'll see a change in my physique. We'll see. For a guy my age, it's tough to make those kind of changes. Anyway, the Starfish, this place is called Activate. Activate. I think it's like $30 for an hour regular price. But man, it was fun. Fully interactive games that you're sprinting around and running and jumping and dodging lasers. It was really, really cool. Thanks, Lisa. That's right. It is. I'm fairly lean now. It's funny. I also did a DEXA scan, which is like it scans you for all your body fat, and I was actually pretty shook at how much body fat I have for my size. I don't feel like I have a lot, but yeah, we're gonna make some significant changes, but it'll be fun. So anyway, no, not gonna wear that shirt. Nope, not gonna happen. Not gonna happen. Anyway, enough about that. Thanks, guys. Tomorrow I have no guests or anything like that, so if you guys want to discuss something, let me know. Let me know what you want to talk about for tomorrow. Obviously, we can maybe do a little pre-NVIDIA talk track, but if you guys have something you want me to discuss, email me, TraderMerlin@gmail.com. You can put your comments down there, or send them to me, or put your comments down below any of the YouTube videos, and I will get to all those on tomorrow's show. So happy trading, everybody. I will see you mañana. Take care.